Good afternoon and welcome everyone to our pop-up pip party and live trading room with Girls Gone Forex and Trade Like a Girl Academy. The FOMC announcement is this afternoon, so since I was available, I decided to do a live trading room and pop-up pit party to see what kind of activity is possibly going to occur based on this rate announcement. We are not expecting any type of increase or decrease, but as many of you know, if you follow fundamentals, anything and everything can happen in the Forex market, and especially when it comes to monetary policy. So just in case, we will be here and ready for that announcement so that we can take advantage of the trading that sometimes can occur during announcements. If you are new to Trade Like a Girl Academy and Girls Gone Forex, we welcome you, and I will take these first 10 minutes or so to talk to you about the Forex market and why we think that it is one of the best ways to generate wealth as well as income as it relates to being a day trader or swing trader, but most importantly, being a self-directed investor. So what you are looking at is live charts of the Forex market that is delivered to us through a platform called MetaTrader 4, and the broker that I am currently logged into is, I think it's FTP. Yes, Professional Forex Trading. This is a live account that you guys are monitoring at this time. What we do as Forex traders is we learn how to not only navigate the MetaTrader 4 software, but we also learn how to use technicals and fundamentals, analyze them both to help us to make good trading decisions in the market. Once you learn how to analyze the charts in the markets for solid trading opportunities, you can create your own strategy that you can use in order to short-term day trade, long-term day trade, swing trade, whatever works for you and your personality in the market. Currently, we're looking at Euro USD on a 15-minute time frame. This is one of the primary pairs that I trade. So you can see that there are horizontal lines on this chart. These horizontal lines are called support and resistance zones. I primarily trade off of support and resistance zones as well as Fibonacci in the market. These support and resistance zones are where the market has created areas of supply and demand that we use to designate where we will enter the market, where we will exit the market, and truly find good trading opportunities. I am a short-term day trader, so what that means is I typically spend anywhere from 30 minutes to 2 to 3 hours in the market. The best days are when we're only in the market for about 30 minutes and we can go about our business. Sometimes the market is in what we call consolidation, and that's when the market is ranging or simply moving sideways and not breaking out of the designated support and resistance zones that we need in order to make good trading decisions. You, as a Forex trader, can choose whether or not you want to trade 2 hours a day, 4 hours a day. If you want to be a short-term day trader, a long-term day trader, or a swing trader. Typically, a swing trader is in the markets much less than a day trader because they are setting up long-term positions that they will be in the market for. So they'll typically set up their trade setups early in the week and then just monitor them just a little bit across the week or weeks that they are in trades. Being able to be a day trader or a swing trader, even a position trader stays in trades very long term, months at a time, sometimes even years at a time, depending on the currency pair they are following and the type of position trader they are. as such, there are various time frames in the market that you can actually use to monitor and to execute your trades on. This, as I said before, is a 15-minute chart, but you can also trade off of a 30-minute chart, an hourly chart. This is what an hourly chart would look like, a 4-hour chart, as well as a daily chart or a weekly chart, so on and so forth. As you see, once we get to the weekly charts, the lines on the bottom get a little bit blurred because I don't trade off of those charts. I typically am looking at the 4-hour, the hour, the 30 minutes, and the 15-minute chart in order to execute my trades. So what exactly do we look for when we are looking to execute trades? Well, it absolutely is dependent on your strategy. There are various types of strategies that can be used in the Forex market and various types of strategies that you can use to be successful in the Forex market. The key to the strategy is, number one, having one that works. And by works, it means that it allows you the capability of analyzing the charts, analyzing the market, and selecting good trading opportunities. Whether it is simple or more complex, it all depends on you and the way that you view the market. I am of the belief system that the simpler the better. All I have to do is read price action, how it is associated with my support and resistance zones, and the candlesticks and the messages that they convey. However, some people prefer strategies that are more complex, that give them a little bit more information as it relates to the possibilities of maybe a trend continuation or a trend reversal in the market, overbought, oversold conditions. Uh, because I actually read the candlesticks, I am able to gain all of that information simply from the candlesticks. But to each his own. When developing or when using a strategy, the key is making sure that you're using a strategy that absolutely works for you and the type of trading that you will be doing. No strategy is 100%, so you're never going to find a strategy that will yield 100% wins with no losses. Loss is a part of trading, and it is something that you absolutely will deal with. When using proper risk and money management, you're able to minimize those losses and maximize your return. And that is one of the major aspects that we teach here at Trade Like a Girl Academy, is always minimize your risk so that you can maximize your reward. And the way that we do that is by selecting quality trades over quantity trades, using proper risk and money management on every trade that we enter. That includes specific stop loss levels, risk per trade, or risk per day that you are using in your charts, as well as having a strategy that you are following. A lot of you may have heard that over 90% of traders fail, and that is a statistic that is not just in the Forex market, that is with futures, that's with options, that's with stock trading as well. And what that boils down to is people not having the key things in place that they need in order to be successful. Trading plan, trading strategy, and the biggest is going to be mindset. Trading can be very emotional. What we have to do is learn how to minimize the emotions so that emotions are not driving your trading decisions. What you want to do is trade strictly based on what the market is showing you in the charts. Once you start trading based on hope and fear and greed and all of the other emotions, even euphoria for that matter, ego comes into play as well. Once you start trading based on those aspects of what happens when you trade, then you are setting yourself up for failure. So through the process of learning to trade, keep in mind that mindset is something that you always have to contend with. There's always going to be challenges as it relates to you as a trader, and getting a handle of that, learning how to control your emotions is huge when it comes to becoming a successful Forex trader. So here we see there's about 5 minutes before the actual rate announcements is released. So if you have any specific questions that you would like for me to address during this call, go ahead and write them in the chat. I will definitely try to get to all of them. We do see here, I'm looking at British Pound USD, a 30-minute chart. We do see that British Pound USD is sitting on a major level of resistance right now. So I'm going to be very curious to see how the market responds to this rate announcement, especially as it relates to British Pound USD. I have British Pound JPY plotted out as well. I have Euro JPY up. It is not plotted out. USD Swiss franc is plotted out with Fibonacci. So as we go from chart to chart, you can see the different types of strategies that are actually uploaded to these charts. USD JPY, this is showing a 4-hour, a daily, and I believe a weekly pivot point support and resistance zones as well. And then we have some other pairs that we can look at how the market responds to those as well. Here's a USD CAD hourly chart. We can see that USD CAD has been in a major downtrend for the majority of, looks like the past 24 hours or so, when it broke out of consolidation and is currently on its way up. So based on this FOMC announcement, we will see whether or not USD can actually continue up, or whether or not it will go back into a downtrend as it relates to the USD CAD. When you are looking at a chart, you're always looking at currency pairs. So in this example, we're looking at the USD, or the US dollar, versus the Canadian dollar. Whichever pair is listed first is considered our base pair. So what that means is, as you see the candlesticks fall and rise, what you are looking at is how the US dollar is responding to the pair that it is paired to. So in this case, this is the US dollar that has fallen quite a bit versus the Canadian dollar over the past 24 hours or so. And when we see these bullish candlesticks here, this is an example of the US dollar now gaining against the Canadian dollar. And that's going to be across the board. If we're looking at the euro dollar versus the US dollar, we see here that the red candlesticks are going to be indicative of the euro falling against the US dollar, because the US dollar is our quote currency. So we have about 2 minutes left. Let me check the chat really quickly before the market starts moving. All right, no questions. So what we are looking for here, let me go ahead and open up some trading possibilities here on this chart. If I execute a trade, it will probably be in Euro USD or British Pound USD. But what we are looking for specifically, when reports come out, there's a couple of things that you have to be cautious of, especially when you are using proper risk and money management. One of them is going to be the spread. And here you can see we have a sell price for the Euro USD and we have a buy price for the Euro USD. The difference between these two, they're also called the ask and bid price. The difference between the two is called the spread. Typically, when there is low volume in the market or high volatility in the market, the spread will increase quite a bit. When that happens, we want to avoid trading until the spread has minimized to a level that you are comfortable with, and that is all part of your risk reward. So once this announcement comes out, we'll look at a couple of the pairs, see what the spread looks like on some of those pairs, as well as how quickly the market may move or not move. Here we can already see that the spread is increasing just a little bit. Here it's going about 2-3 pips. Typically Euro USD is going to be less than a pip on that pair. And we can absolutely see that the euro is increasing against the US dollar based on the FOMC announcement. Now, some people would have already been in this trade. I am one that waits for the spread to diminish, as well as wait for clear direction in the market. And this is a lot more than clear direction in the market. But what you also have to contend with is possible pullbacks. And what you're hearing in the background is some of my other charts that are actually giving alerts of what the market is doing. So it appears that whatever the rate decision was or was not, the market is absolutely looking at this as from a perspective of the dollar weakness. If we look at the USD JPY, what we should see on that pair is the dollar going down. And that's exactly what we're looking at here. This is the US dollar versus the Japanese yen. And here you can see that there is major dollar weakness. So across the board, that is something that we should be seeing with many of our pairs. We see that it's starting to pull back already on all of our pairs. I like the 3100 as an entry for British Pound USD, GBP JPY, Euro JPY, USD Swiss franc should be coming down as well, and that's what we see here. USD CAD should be coming down as well. So you can see that they're based on the announcement that there is a ton of USD weakness. Here is where we were anticipating whether or not it would continue up or down versus the USD CAD, and as we can see here, it has definitely come down. So what does that equate to as it relates to possible profit that could have been gained on a report like this? Here we can see that on the Euro USD, let me see what if British Pound's going to break. Here on the Euro USD, we see that it started at the 1.1416 area. That is the price that the market was at when right before the release, and it went all the way up to 1.1459 and is continuing moving up now. So the difference between those two is actually where the profit can be gained or lost, for that matter, within a trade. So the difference between 15 and 60 is going to be 35 pips, if my math is correct this morning. So that 35 pip gain that would be possible here, and I'm going to play the 470, that 35 pip gain that is continue to go up at this current time, had you bought into the pair anywhere around that level or any of these levels above, would have been profit for you at this point. You choose where you want to get into the market, you choose where you want to get out of the market. So that 35 pips, assuming that we got in at the beginning and we actually closed our trade out at the 59 level, would have been about, I'm counting 35 pips, but it actually would have been a little more than that. That would have been profit. So we'll just stick to the 35 number that I was using. That 35 pips, 25 pips, 10 pips, depending on where you got into the market, the way that that equates to profit is based on what your pip value is. In this case, at 0.10, 0.10 would be equivalent to $1 a pip. So in that very short period of time of 2 to 3 minutes, then you would have made $35 within that short period of time. If you were trading at $10 a pip, then you would have made $350 within that short period of time. If you were trading at 10 cents a pip, then the same thing applies. The way that you decide what your pip value is going to be dependent on your account size and your risk appetite, which can vary from conservative to moderate to aggressive. And even though some people trade aggressively, there still has to be proper risk management when you are executing your trades and when you are getting into trades. Just like we would have gained if we bought based on what the market was doing, there may be someone somewhere in the world today that happened to be in a euro sell before this report came out, whether they were thinking that there wasn't going to be any movement, whatever the case may be, then just like we would have gained on an entry going north or on a buy long position on this particular trade, someone else is also losing on this trade. So the same thing applies as we continue to move up. 50 pips, 60 pips, 70 pips, however far this thing chooses to go. Someone else very well, especially if they did not have stop losses in place and proper protection in place, someone else is losing that $50, that $500, that $5,000 in their account as well. So proper risk and money management when you trade is something that is absolute, regardless of how quickly the market is moving or how slowly the market is moving. Let's look over here at British Pound USD. Here we have the 30-minute chart. This one went about 50 pips as well and is still attempting to go up. It started at about 30.60, and that was that major level of resistance for the British Pound USD pair currently, and it has broken over the 3,100 level. I like that area. Here you can see that the market, even though the market is moving based on fundamentals, look how nicely it is still respecting those support and resistance zones. So those support, that is why we trade based on technicals and what the technicals are, because they do allow us to choose good solid entries and good solid exits. So we could have chosen to get into this particular trade anywhere at the break of the 2.9, the 3.5, the 4.3, so on and so forth. And then of course we would set our take profits and our stop losses based on the other zones that were here on our chart. The same applies here for this 30-minute British Pound chart. A break above the 7.8 with a take profit of the 3,100 would have yielded about a 22 pip gain on that particular trade. British Pound JPY, same thing. Now it's starting to pull back a little bit, but a break of the 143.18 would have yielded about a 20 pip gain for British Pound JPY. Let's look at the opposite side and what the USD weakness would have done. Here we see that the US dollar versus the Japanese yen started about 109.52. Once the report came out, it went all the way down to 109.29, 109.30 or so. So that too would have been, if you sold, this would have been about a 20 pip profit here with the USD JPY. On the USD CAD, we started above the 0.1 area. The 0.1 area, it came down about 50 pips here. So on a USD CAD sell, depending on where you got in, whether it was the break of the 201 or the break of the 89, would have yielded anywhere from about 40 to 50 pips profit, assuming you got into a short position again and not a buy. Had you gotten into a buy position, then this would have been a loss for you. So based on your pip value of 10 cents, $1, $10, $100, based on your account, of course, as well, and proper risk and money management, that is what the profit side of the FOMC announcement would have been. Let's go ahead and take a look and see now what the results of that actual trade was, or the report was. What I can do is go to many different sites that actually have the announcements. It actually will show you what the reports were, what the end results of the reports were. So this is myfxbook.com. Here at myfxbook.com, not only can you view the economic calendar, but you can also see what the results of the actual announcement were, as well as additional commentary, because after a rate announcement is released, then there is a statement that is released with it that basically tells us why they made a specific decision. So here we see that the Fed interest rate decision was scheduled for 1 p.m. Central Standard Time. The previous rate was 2.5. The consensus was that they were going to keep it the same, and they did actually keep it the same. So for whatever reason, what the market is viewing this as is USD weakness. Sometimes it could be viewed as USD positive, sometimes a USD negative. Because we are looking at USD weakness across the board with our charts, then the market is actually absorbing this as a weak thing. The monetary policy statement was released as well, and here in about 18 minutes is going to be the press conference where Powell will actually come and speak and tell us what his view was. Another website that can be used to gain this information is forexlive.com. And at forexlive.com, they'll be able to give additional information as it relates to the statement that was released, to glean for those of you who really want to know what went on, why are we seeing the weakness. This is where you can get some of that additional information.